Applied Materials is the second largest company in the semiconductor equipment and materials industry, ranking just behind ASML and ahead of Lam Research and Kelly Corporation. Together, they generate nearly 68% of the total industry revenue, with Applied Materials contributing a quarter. Together, they account for 89% of the total industry market capitalization, so these four dominate the industry. By the words from Applied Materials themselves, they are the leader in the materials engineering solutions used to provide virtually every semiconductor and advanced display in the world. Specializing in advanced engineering, the company helps manufacturers enhance chip performance, improve power efficiency, and scale production effectively. Applied Materials operates through three major business segments. Their largest is Semiconductor Systems, accounting for 73% of revenue in 2024. It focuses on designing, developing, manufacturing, and selling advanced equipment used in semiconductor chips fabrication. Applied Global Services is their second largest, which contributes 23% of total revenue. These segments provide services, spare parts, and fabrication automation software to semiconductor fabrication plants worldwide, ensuring efficiency and longevity of manufacturing operations. And their last is the Display segment, which accounts for 3% of revenue. This segment primarily offers equipment for manufacturing LCDs, OLEDs, and other display technologies used in TVs, monitors, laptops, and various consumer devices. So now let's jump on to financials. Looking at revenue in 2024, they generated 27.2 billion, that is 2.5% more than in the previous year. Looking at historical performance since 2010, on average, the company achieved annual growth rate of 7.8%. Profitability is also improving. Gross margins are now approaching 48% and are substantially up from the 40%, let's say, 10 years ago. The same is true for net profit margins that are now hovering at around 25 to 26%, and for EBITDA margins that are now hovering around 31%. CapEx is the highest since 2009, currently taking up 4.4% of revenue. While CapEx might seem as a negative, it could also suggest that the company is investing in growth and innovations to stay competitive. Now looking at cash flow from operations, it surpassed 30% for the first time in 2023, but we can go further and now sum all cash flow from operations and divide it with the EBITDA to get 88%, indicating strong financial reporting. We will use this number later in our valuations. And by looking at our graph, we can also see that EBITDA in blue and cash flow from operations grow in the same direction, which is good to see. To get now free cash flow, we need to subtract CapEx from the cash flow from operations. And as we can see, free cash flow is also expanding and margins are now approaching 30%. Another positive aspect is share repurchases. On average, Applied Materials has been buying back 3.4% of shares annually. Dividends are also growing at 9.2% over the same period. And this is looking solely on a cash amount. While with the share repurchases taken into account, this takes this percentage to 13%. The current payout ratio for the dividend is 16.6%, and they're paying $1.43 per share. Lastly, we can evaluate profitability from the core business by summing net income, depreciation, amortization, and deferred income taxes. From the given number, we can then subtract capex and common and preferred dividends to get our free cash flow from primary business, which averaged 5 billion over the last 4 years. Now here we can multiply the given number with 20 to get our first stock price, which is $122.20. This takes into account cash and we can out subtract debt. Before moving on to projections, know that these are assumptions and this is not financial advice. If you enjoy this content, a like would mean a lot. Thanks. Okay, for projections we use 3 different scenarios over the next 3 years. For the revenue growth, we use 0% for our minimum. This will be our baseline. Our average growth is 3%, which is below historical growth but slightly above recent years. And our high growth will be set at 6%, just below the long-term historical average. For net income, margins of 15, 20 and 25% were used, while for EBITDA 24, 27 and 30% were used. For cash flow from operations, we used 88% we calculated earlier, and this gives us 21, 24 and 26.4%. For capex, 4.5% was used across the board. With all these assumptions, we can calculate free cash flow, which for 2025 ranges from 4.5 to 6.3 billion. Now, of course, before we can use any of these numbers, we need to discount them back to today, and for this we'll use 12.5%. And this gives us a terminal value of 36.6 billion to 57.4 billion. So for our first perpetual growth rate model, we'll sum up all these numbers to get a present value. From here, we can then subtract out debt and add in cash and divide with the shares outstanding to get our stock price, which ranges from around $62 to $94 on the highest side. If we do the same with the free cash flow analysts are expecting, we get $86.33. Our second valuation model is EBITDA multiple. Here we use two different multiples. One is for the company average and one is for the industry average over the last 10 years. And here we take 2027 EBITDA numbers and multiply it with a given multiple. And here we get these numbers. Then of course we need to again discount them back to today and divide it with the shares outstanding, add in cash and subtract out debt to get these stock prices. Here the analyst numbers are higher because they projected a higher 2027 EBITDA number. Now to get the range of all the prices from perpetual growth rate and EBITDA multiple, we will average both company average and industry average with the perpetual growth rate, which gives us a stock price range of $72.27 to $107.59 for the company average, and from $99.31 to $147.84 for the industry average. And again, the analyst number are higher because they had a higher EBITDA number. So based on all of this, what should you pay for Applied Materials? To recap, Applied Materials is a strong company with good revenue growth, clean financials as EBITDA and cash flow from operations do match, which is very good to see, and they have very low leverage. And actually they also have more cash than debt, so this is not an issue at all. They are also repurchasing shares with 3.4% annually, and their free cash flow is growing and is positive for the last 4 years. In addition to all of that, they have a small dividend with a current dividend yield of 1% and a dividend growth of 9.2%, looking only at the cash. And their dividend payout is 21.2% over the last 10 years. So based on all of that, my personal buying target is $125, which puts trailing PE at 16.44, which is below the company's 10 years average of 19, and this provides a margin of safety if any of this assumption is wrong. But if you believe Applied Materials would do better, then it could be a buy at the current price of around $150. If you would like more defensive stock, watch this video over here. Otherwise, let me know what you think about Applied Materials. Do you own it? What's your price you're willing to pay? Let me know in the comments below. If you're into value investing, subscribe for more analysis like this. And I'll see you in the next video. Bye bye!